1st of November, October is now over, 1st of November, so we've got a new candle. We will be starting a new candle on the monthly chart. This is the monthly chart for the US dollar index. You're probably pretty bored of this by now. You know it off by heart. Big trend line going back 9 years, 100-month moving average, 38.2% Fibonacci support at 91.93. Big bullish engulfing candle in September. Now, October was confusing me. I didn't know why we'd fallen so much, and when we did fall so much, I was hoping to buy the dollar down here. Didn't quite get the chance, but we did manage to get onto some long dollar trades anyway on, what was it? Was it Wednesday or Thursday? And managed to ride a good amount of that move up. So not too bad this week. Does look positive. Certainly this candle, this hammer's positive as well. So I think this is all very bullish for the US dollar. Oversold on the monthly chart. Go to the weekly chart. We are a bit more confusing on the weekly chart, to be fair. Obviously there's a big blue bodied candle here which is positive. When we go to the daily chart, that's also not really telling me anything, quite frankly. We've got resistance from the 100-day moving average, which is around 94.25, 94.30. We've got a little bit of resistance at the 94.40 Fibonacci, 23.6% Fibonacci. So that will be the level to get through. If you are already long the US dollar, you want to see it getting through this area here. We'll probably struggle initially. Would I try a short there? No, probably not, because the longer term charts look quite positive. Stochastics look quite good. But anyway, that is the major resistance of the week. So if you are looking to buy into longs because you're not already long, or even add to longs if you are already long, then a breakthrough sort of 94.50, 94.60 should be the buy signal we're looking for. And then obviously that monthly chart will really kick in. Aussie dollar reversed bang on the trend line on, it was Wednesday on that move. So Wednesday, we had a big sell-off in the Aussie dollar from the trend line. Well done if you managed to short that. I did suggest a short on that, but you had to be up early for the report in order to jump on that trade. But I think some of us managed to do it. New Zealand dollar also outlook quite negative. We had something similar on New Zealand dollar. We were selling it here. It's come down to the 100-day moving average, and that has held absolutely perfectly through Thursday and Friday. So obviously, that's the level to watch this week. A break below here will be a sell signal, say a break below 65.90. If we rally up, we will be looking to sell at the trend line again at sort of 67.25 area. In between there's nothing really to trade. On the downside, we have strong support at 65.30, 65.20, which is the neckline to the head and shoulders, and the 500-day moving average as well. So that's the big support area. Break below here this week will be a very significant sell signal, because as you know, I do think that is a head and shoulders pattern with a double top as the head. So all very negative in the longer term. Dollar yen has been confusing me lately, so I haven't really been putting trades on in this pair. We are in a downtrend on the weekly chart, at least for the last few months. So I guess that there is a negative bias to it. 100-week moving average should be good support around 103.75, 65. But I'm not really getting any strong signals from this pair, so I am just going to leave it. Actually, having said that, look, these two candles look pretty positive here. So just as we're getting oversold, just as we retest or got close to a retest of the September low, we certainly retested the August low, did we, at 104.17? We got close to it. 104.01, yes we did. September low, 10. Okay, we tested the September low. So I suppose I can argue this is a double bottom. A bullish candle on the first low and a bullish candle on the second low, with another bullish candle on Friday when we retested it. So breaking that down, I could certainly argue for a double bottom in the bear trend. So that would be bullish, almost a triple bottom really, from the July low, which was at 104.17. Yeah, I guess that is quite bullish, but I'm just not feeling a strong signal from this. It's just a bit wishy-washy, sideways trending. Okay, daily chart for the Euro US dollar. This has been really confusing. I don't know what this pattern is. I don't even think it is a pattern. So trying to second guess this has been extremely difficult. The 100-day moving average seems to be holding 116.53. Well, we got down to 116.38, so not that far below it, and a small recovery to around the 100-day moving average. But there isn't really anything I can say about this market at the moment. I'm looking for signs that the euro will fall against the US dollar, because obviously I'm a little bit more positive about the US dollar. But this in itself isn't telling me anything at all. Okay, Canadian dollar. US dollar pushed higher against Canadian dollar. We hit our selling opportunity. You know why there. A good strong Fibonacci resistance around the 133.80, 134.00 area, coupled with the 500-day moving average, was enough to convince me to get into a short. Now, I thought that this would be good support down here around 133.30, and I took profit too quickly on that. I don't know why we bottomed out, why this seems to be such a level down here around 132.70. Actually, yes, I do, and I'll show you on the short-term chart why that is the case. On the daily chart, it doesn't show anything. So, for now, as long as we hold below 133.80, 134.00, this is negative. Probably fancy more of a sideways trend than actually a move down. The weekly chart I don't think is telling me anything. No, that's just a load of confusion, really. The short-term chart tells me why we bottomed out around that 132.75 level. We've got a 38.2% fib there, and we've got the 100-hour moving average coming up close to there. So actually, there's even a moving average on the 4-hour chart around there too. So this will be the key support level for the start of next week, 132.70, 132.60, and we've obviously got the resistance at 133.80, 134.00. Anywhere in between there, well, you know, we're just chopping around really and not holding any particular levels. That looks like maybe 133.40, 133.50 is doing something, but I wouldn't be trading that level necessarily. Okay, look at gold. Gold chart's been hot. The gold market has been horrible. I found this very difficult to trade. Up one day, down the next. Quite a few dojis where we move in one direction and then maybe in the other direction, and then close unchanged, which doesn't give us any indication of movement for the next day. We had a big blue candle last week, followed by a big red candle, so that was very confusing last week. Began confusing this week. Now, towards the end of the week, I think we've got some clue to direction. Again, with that positive US dollar bias in the back of my head. Big red candle breaks through the 100-day moving average. Now, that has been good support. You can see we held just above it through the first 3 weeks of October. Certainly caught the low in September. And going back here, we haven't been below the 100-day moving average, well, since March of this year, but we didn't hold below it. You can see that the 100-day moving average can be a very good support resistance line. Well, it was back here in November, December. So I'm going to have to judge my trades on this one now. We were selling it up around there at 18.87, 18.89 on Friday, and that trade did work nicely. Gave us around maybe 10 points profit, maybe a little bit less than that, but I was happy with I think 7 or 8 points profit in the end. But that was good enough for a Friday when we really didn't do much. I'll try the same trade again if we have another bounce. Anywhere up to 118.90 to 119.00 is actually the strong resistance area. So just to check the weekly chart. Weekly chart isn't showing anything in particular. We've broken below this trend line, so that's quite negative. We've got some support from the 23.6% fib at 1858, 1859, and it certainly worked perfectly on last week. I think we were buying down there, weren't we? Yeah, we did get into some longs down there. So that will be key. Break below 1855 would be the sell signal, and I think that's the most likely scenario. We break below 1855. We've got a low down here, 1847, but this 1847 low won't be as strong as it was last time. I believe that we bounced because of the 100-day moving average, which of course we don't have now. Break lower, easily see 1835, 1825 quite quickly. So yeah, I feel moves to the downside coming in gold. Silver I often find harder to read. Certainly have on this chart. We did have some good trades in silver actually. We were selling it up around 24.5 in the middle of the week, and then we did quite well on this sell-off. And I think we actually got very close to getting out near the low of that day, didn't we? Yeah, 23.00 we got out. Anyway, we bounced back to the 100-day moving average at 23.50, 23.60. We went a little bit further, we went to 23.80. I don't trade silver anywhere near as much as I trade gold, and I'm going to leave it alone now. I'm going to trust the gold chart. The silver chart, I'm not really sure. Obviously, holding above 23.55 in theory would be quite positive, but no, I'm going to leave it. I'm going to focus on gold this week. Oil, I'll be honest, I find it difficult to trade. I'm not surprised it became lower. We broke the 38.2% fib, which had been such great support. We've hit the 50% fib. So I assume that the levels to watch now would be the 50% fib at 35.00, 34.80, and the 38.2% fib around 37.00, 37.20. Those are the levels to watch. On the short-term charts, I've not really got anything else to watch. Oh, hang on. I can show you the 1 hour chart, where we're trading quite nicely in between these short-term fibs as well. The 23.6% is at 36.50, 36.60. So that's certainly working, not a strong level, but if you were scalping there, you've done quite well. I did have that in the report on Friday. Okay, that's it for the Forex market. Actually, I'll just have a quick look at the British pound chart with all this Brexit stuff going on. I haven't been trading it. I haven't really seen anything that's been too convincing. This chopping around stuff looks quite messy to me, and I don't really have any reliable levels on it. I know some of you do trade it. If you've done well on that, good for you, but I can't see anything that I can recommend with this one. It's just all over the place. Okay, I'll get on and do a stock index video now.